Preparing for a Banque Saudi Fransi interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work at Banque Saudi Fransi. I would position myself as someone with a strong finance foundation, client focus, and discipline around controls. Banque Saudi Fransi appeals to me because it operates in a sophisticated Saudi banking market with exposure to corporate banking, retail services, treasury, and digital transformation. I want a role where I can combine analysis with practical client impact. My strengths are structured problem solving, accuracy under pressure, and learning quickly in regulated environments. While answering, connect your background to banking, client service, risk awareness, and Saudi market growth. Show you understand BSF's corporate and retail banking presence, not just the brand name. Question 2. What do you know about Banque Saudi Fransi and its role in the Saudi banking sector? Banque Saudi Fransi is one of Saudi Arabia's established banks, serving individuals, corporates, institutions, and government-linked clients. Its role is not only lending and deposits, it supports trade finance, treasury solutions, digital banking, and wealth-related services. In Saudi Arabia, banks are closely tied to Vision 2030, infrastructure development, SME growth, and capital market activity. I would expect BSF to compete through relationship banking, risk discipline, technology, and strong compliance with SAMA requirements. Make sure to cover BSF as a major Saudi bank, its corporate, commercial, retail, treasury, and investment-related services, and its alignment with Saudi economic development and regulatory expectations. Question 3. How would you assess the creditworthiness of a corporate client applying for a loan? I would start with the borrower's ability to repay from operating cash flow, not just asset backing. I would review revenue stability, margins, leverage, interest coverage, working capital cycle, and historical payment behavior. Then I would assess industry risk, customer concentration, management quality, collateral, and proposed covenants. For a Saudi corporate, I would also consider exposure to government contracts, oil-linked demand, and Vision 2030 projects. The final view should balance opportunity with downside protection. In your answer, talk about the business model, cash flow, leverage, collateral, management quality, industry outlook, repayment source, covenants, and relationship history. Avoid relying only on collateral value. Question 4. What is net interest margin, and why is it important for a bank like BSF? Net interest margin is the spread a bank earns between interest income on loans and investments and the cost of funding through deposits or borrowings. For BSF, it matters because it reflects the profitability of core balance sheet activity. A stronger low-cost deposit base, disciplined loan pricing, and effective asset liability management can support NIM. However, competition, rate changes, and credit quality can pressure it. NIM is usually analyzed alongside loan growth and risk costs. Be sure to mention earning assets, funding costs, loan pricing, deposit mix, interest rate movements, competition, and how NIM links directly to core banking profitability. Question 5. How would you handle KYC or AML red flags during client onboarding? I would not ignore or work around a red flag to speed up onboarding. I would verify identity, beneficial ownership, source of funds, business activity, and expected transaction behavior. If something looks inconsistent, such as complex ownership or unusual fund flows, I would document it and escalate to compliance through the correct channel. The key is to protect the bank, follow SAMA and internal policies, and still communicate professionally with the client. While answering, focus on regulatory discipline, customer due diligence, source of funds, beneficial ownership, sanction screening, escalation, documentation, and balancing client experience with compliance obligations. Question 6. Can you explain the difference between conventional banking and Islamic banking products? Conventional banking typically uses interest-based lending, where the borrower pays interest on principal. Islamic banking avoids riba and uses Sharia-compliant structures linked to trade, leasing, or partnership. For example, in Murabaha, the bank buys an asset and sells it to the client at a disclosed markup. In Ijara, the bank leases an asset to the customer. In Saudi Arabia, understanding both approaches matters because clients may choose products based on faith, economics, and documentation needs. Make sure to cover interest-based lending versus Sharia-compliant structures, asset backing, profit rates, Murabaha or Ijara examples, and why Saudi clients may require both product understanding and sensitivity. Question 7. A customer is upset because a transaction was declined. How would you handle the situation? I would first acknowledge the customer's frustration and make sure I verify their identity before discussing account details. Then I would check whether the decline was due to insufficient funds, limits, incorrect details, fraud monitoring, technical issues, or compliance restrictions. If it can be resolved safely, I would guide them immediately. If not, I would explain the next steps clearly and escalate to the right team. The objective is service recovery without weakening controls. In your answer, talk about empathy, verification, confidentiality, root cause analysis, policy limits, fraud controls, clear communication, and escalation when the issue cannot be resolved immediately. Question 8. How would you cross-sell banking products without damaging client trust? Good cross-selling starts with understanding the client's need, not pushing a product target. If a salary account customer travels often, a credit card with travel benefits may be relevant. If an SME struggles with payment timing, cash management or working capital solutions may help. I would explain features, fees, risks, and alternatives clearly. Trust grows when the recommendation is suitable and transparent. In banking, a long-term relationship is more valuable than one forced sale. Be sure to mention needs-based selling, suitability, customer profiling, long-term relationship value, regulatory fairness, and avoiding product pushing. Tie cross-selling to solving a genuine client problem. Question 9. Which financial ratios would you review to evaluate a bank's performance? For a bank, I would review profitability, asset quality, liquidity, capital, and efficiency. Key ratios include return on equity, ROA, net interest margin, cost-to-income ratio, non-performing loan ratio, provision coverage, loan-to-deposit ratio, and capital adequacy. A bank can show strong profit but still have weak asset quality or aggressive leverage. That is why I would read ratios together. For BSF, I would also consider growth, quality, and resilience under changing interest rates. While answering, include profitability, asset quality, capital, liquidity, and efficiency metrics. Mention return on equity, ROA, cost-to-income, NPL ratio, coverage ratio, capital adequacy, and deposit funding. Question 10. How do interest rate movements affect a Saudi bank's profitability? Interest rate changes affect both loan income and funding costs. If a bank has many floating rate loans linked to SIBOR, asset yields may rise quickly when rates increase. But deposit costs can also rise as customers demand better returns or shift balances. The impact depends on repricing gaps, deposit mix, loan structure, and hedging. Higher rates may support margin initially, but they can also slow credit demand and increase borrower stress. Make sure to discuss asset repricing, deposit costs, SAIBOR-linked lending, customer behavior, treasury portfolios, net interest margin, and the timing mismatch between loan yields and funding costs. Question 11. How would you evaluate an SME loan request in the context of Saudi Vision 2030? Vision 2030 creates real opportunities for SMEs, especially in logistics, tourism, healthcare, technology, and local manufacturing. But I would still evaluate repayment capacity carefully. I would review financial statements, bank turnover, customer concentration, cash conversion cycle, owner track record, collateral, and purpose of financing. If the SME benefits from government programs or contracts, I would assess their reliability and payment timing. Supporting SMEs is important, but credit decisions must remain evidence-based. In your answer, balance growth opportunity with credit discipline. Cover business viability, cash conversion cycle, owner experience, financial records, sector support, collateral, guarantees, and government-backed programs where relevant. Question 12. Describe a time you worked under pressure with strict deadlines. In a finance project, I had to finalize analysis for senior review while correcting late data changes. I first separated critical items from cosmetic updates, checked the source files, and built a quick reconciliation to avoid errors. I communicated timing clearly and asked one teammate to review formulas while I handled commentary. We delivered on time with no material corrections. That experience taught me to stay calm, prioritize controls, and communicate early under pressure. Be sure to use a structured example with situation, task, action, and result. Emphasize prioritization, accuracy, communication, stakeholder management, and calm execution in a controlled environment. Question 13. What is expected credit loss under International Financial Reporting Standards 9, and why does it matter for banks? Expected credit loss under International Financial Reporting Standards 9 is a forward-looking provision for potential credit losses, not just losses already incurred. Banks estimate probability of default, loss given default, and exposure at default. Loans are typically classified into stages, depending on credit quality and deterioration. It matters because provisions directly reduce profit and signal asset quality. For a bank like BSF, strong ECL models help manage risk early and support transparent financial reporting. While answering, focus on forward-looking provisioning, probability of default, loss given default, exposure at default, staging, credit deterioration, and the impact on profitability and capital. Question 14. What opportunities and risks do you see in digital banking for Banque Saudi Fransi? Digital banking gives BSF the opportunity to improve customer convenience, reduce branch dependency, automate service, and use data to personalize products. It also helps attract younger mobile-first customers in Saudi Arabia. The risks are serious: cybersecurity, fraud, outages, weak user experience, and compliance gaps in digital onboarding. The winning approach is not just launching apps. It is building secure, reliable, well-controlled digital journeys that customers actually trust. Make sure to cover customer convenience, lower transaction costs, data analytics, fintech competition, cybersecurity, fraud prevention, operational resilience, regulatory compliance, and the need for strong user experience. Question 15. Why should Banque Saudi Fransi hire you for this role? BSF should hire me because I bring the combination banks need: analytical discipline, client focus, and respect for controls. I can understand financial information, communicate clearly with stakeholders, and work accurately in a regulated environment. I am also motivated by Saudi Arabia's banking growth and BSF's role in serving individuals, corporates, and institutions. I would add value by learning quickly, taking ownership, and making decisions that protect both the client relationship and the bank. In your answer, connect your skills directly to the role requirements. Highlight finance knowledge, client orientation, compliance mindset, teamwork, adaptability, and motivation to contribute to BSF's Saudi banking franchise. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video.